Palantir seems to be unstoppable more recently, whether it's good earnings report, contract announcements, new partnerships, S&P 500 inclusion, which I'm going to talk about in a separate video, or analysts coming out with positive comments and a better price target, or should I say a higher price target. Now that's all great, right? Because higher price target usually pushes the stock up. But that's short-term thinking. You want to see why they reach their conclusion. Then right now, Palantir's price target should not be $35 or $30, but should be $50. And the reason being, just because the price of the stock has gone up is not a good reason, right? We've seen the opposite happen as well. Price of the stock goes down, price targets go down, even though the logic behind it doesn't make much sense. But right now, Palantir is up 101% year to date, close to 50% up in the last 3 months, and up close to 130% year over year. Has a market cap of close to $80 billion, and of course a forward PE of 87.3 times, so definitely not the cheapest one out there. EV to sales 24.4 times, so yeah, not cheap at all. Now the growth rates, for example, for this year have gone up. We've started the year, I believe the year-over-year growth was expected to be the same as next year, 21% or so. We're now closer to 24%. I expect it to be a bit higher towards the end of the year. EPS growth 42%, followed by 21 and 20.4% year over year. Again, I do think that sales should be growing closer to 30% rather than close to 20%. So we'll see these numbers change probably in the coming quarters as Wall Street gets new numbers and sees, oh, actually, revenue continues to accelerate, so maybe we should update our models. Currently, the average analyst price target sits at $26.48, representing 23.3% downside from the price we're at today. Of course, everybody's talking about how Palantir has gone up a lot. I mean, I started this video basically talking about that. And it's important to note that even when the stock goes up a lot, don't panic, don't FOMO. The same as we've been saying when the stock went under $10, under $12, don't panic. Don't panic sell, look at the business, focus on the business and less on the stock price. Because of course it's great to see that you're now up 100%, 200%, 300% if you really time the bottom correctly. That's great. But who cares? Do you plan on selling your shares today? I mean, taking profits, nobody is going to blame you, right? If you're up 300% in a short period of time, short period meaning not 5-10 years. If you want to take profit, go ahead. If you want to buy covered calls, all of those things, go ahead. Options is not really my thing, but there's no shame. There's no shame in looking at your portfolio and saying, oh, actually, I'm up triple digits. Might want to take some profits here or might not want to add right now, even though there's lots of positivity around the company, around the stock. Because eventually, the stock goes up, but at a certain point, the stock and the stock market will notice, oh, it has gone up maybe too fast. What has the business done? One, oh, the business has actually followed, so continues to reaccelerate, so that makes sense. Or two, business is doing well, but maybe not as well to justify the stock price. We've seen that with other companies as well in the stock market, right? Good earnings report, but because it was priced to perfection, stock is down or flat-ish. We've seen that play out before. Anyways, in this video, I want to touch on the $50 price target from the analyst at Bank of America, and a couple of extra things as well. If you enjoy this type of videos, leave it a thumbs up, subscribe, do all of that, hit all the buttons, would really appreciate it. If you want to support me even further, do check out all the links down in the description and in the pinned comment, or go to fool.com/couchinvestor. Thank you very much. Alright, let's start with announcements first. Palantir and BP agreed to a 5-year strategic relationship with new AI capabilities. Palantir and BP, not big problems, but BP, have announced an enterprise agreement that will extend their strategic relationship and introduce new artificial intelligence capability with Palantir's AIP software. By the way, I don't know if you've noticed, but Palantir on X have made a little teaser announcement. It will pop up on the screen right now. I zoomed in and I figured out, because I'm such a genius, that it's probably AIPCon 5. Anyways, continuing here. The new contract will build on a decade of deep collaboration that has created a firm foundation for BP's oil and gas production operations using Palantir's industry-leading software. Since 2014, Palantir's software has been deployed widely by BP to support its oil and gas production operations from offshore oil platforms in the North Sea and the Gulf of Mexico to the Kazan gas fields in Oman. And here's a short 2-minute clip of a former CEO of BP that explains why they adopted Palantir and explained also why they bought 1% of Palantir after using their product.
Well, it's a pretty extraordinary story. We had a number of problems in BP for a while. In the early part of the last decade, BP stood for big problems. We were dealing with the Gulf of Mexico spill and had issues. We had legal issues, and I won't go into that, but unbelievable. That's what opened up my eyes. Unbelievable ability to see data from all different directions, put it quickly, like within days, and visualize it. We realized how big our problems were at that point. But then I thought, this is amazing, because I used to be a production engineer in the North Sea, and I remember what it was like. You had your well file, and there was a geologist down the way, and there was offshore equipment data, 20 years of history on a well. I said, Alex, do you think your team could maybe simplify this process? So 2 intrepid Palantir people came in. I think they worked the weekend and came in, and they put this into some program you have. That the engineers and the geologists and offshore were just amazed. It was suddenly like all that friction of getting all this stuff together to make decisions was done like that. So I thought, okay, let's expand this. Never wanted to make it a top-down initiative in the company. So pick different parts of BP around the world. It might have been retailing, what's on the stocking shelves. It might have been optimizing a refinery, going to places like Azerbaijan and sorting out something called sand control, which won't mean anything to most of you, but it's a big deal in oil and gas. And it just took off. And the engineers and the people who were all working on them always worked really well with your engineers. I guess you call them engineers or software engineers or smart people, really smart people. And then we said, okay, let's try something new. We have a giant field in Oman that we've discovered, and we want to build it out. And what you would have done is you would have gotten engineers, put it all in a grid, and you had a plan to drill all the wells, and it'll be just like this, the flow lines and the facilities. And you said, one of your team said, we might be able to do that better for you. Let's start with the first well. What does it look like? What's the subsurface look like? What are the temperatures, the pressures? And you put that in the model we thought we had. Every single well was different. So there's a giant gas field in Oman that's built out like capillaries in the human body. It was done half the time, much more efficient, great investment, and they helped us with that. So then, suddenly, I was faced in the company with everybody wanted to use Palantir because it was demand pull, and so we had to prioritize it. But I have to say, revolutionized BP. BP bought 1% of Palantir to align what we were doing, which was also another good investment. And we had an exclusive agreement in the energy industry. So I'm really grateful to the talent there. And that's how I found out what big data was through all that stuff.
Moving on here, the Forrester Wave. Palantir was named the leader in AI and machine learning. Palantir has one of the strongest offerings in the AI machine learning space, with a vision and roadmap to create a platform that brings together humans and machines in a joint decision-making model. Its approach is to use its data pipelining capabilities and differentiated ontology to support the basis of its AIP offering. Like I said, Palantir's momentum, unstoppable. Now, moving to the new price target from the analyst at Bank of America, of course that's from Mariana. So S&P inclusion to unveil the overnight AI success over 20 years in the making, updating their price target to $50. Now, if you can look here on the right and pause the screen if you want, key changes. You can see that previously the price target was 30, now it's 50. Despite it going to 50, revenue for 2025 is a little bit lower than previously. That's because it's not always about revenue, it's about also the multiples, free cash flow, and other things. We'll discuss that in just a bit. So she started by saying here, watershed moment to revisit what you know about Palantir. In 1980, AT&T hired a consultancy company to estimate the market size for cell phones by 2000. The study suggested there would only be around 900,000 users. The actual number of mobile subscriptions in 2000 was over 100 million. These early estimates also failed to anticipate the world of apps, streaming, smart devices, and ultimately how this new product would bring forward the first public trillion-dollar company, which is of course Apple. We view Palantir's capabilities, technology, and path forward facing a similar fundamental misunderstanding. The upcoming S&P 500 inclusion provides a watershed moment for institutional investors to revisit what they know about Palantir, we reiterate our buy rating and raise our price target to $50. They continue by saying here, culture matters, pursuing value, not unprofitable total addressable market. You also can see here their estimates for EPS, GAAP EPS, EPS change year over year, valuation, etc., etc. If you're interested in that, pause the screen. But I say here, Palantir's non-conventional sales approach, where the engineers play a key role, has been highly criticized by the software investors as a limitation to product scalability and profitability. We disagree. We think this method makes Palantir solutions significantly more relevant to the users and gives Palantir strong pricing power. The engineers create intimacy with the customer's mission and help shape the product to add real value, as we've heard the former CEO of BP talk about them. First, probably as a customized solution, but ultimately these improvements add value to the entire customer base as they are incorporated to the base product, in many cases generating upsell opportunities. The engineer's sales bond is a key factor to Palantir's pricing strategy, where they target to get a proportion of the value add. With less than 300 US commercial users and less than 600 overall, Palantir boasts at around 35% operating profit. We view this approach as a key differentiator to profits robustness, especially compared to other software companies where the path to profitability is just based on tapping a customer base large enough despite their initial unprofitability. They then go on and talk about joining the fellowship of the S&P 500, key for institutions. So last Friday, Palantir was among the companies set to join the S&P 500 index. Following the news of the S&P rebalance, Palantir will begin trading as part of the index on Monday, September 23rd. We think that becoming a member of the S&P 500 could be highly beneficial to Palantir's stock volatility. We think that the inclusion would attract more institutional investors, both passive and active. Beyond lower stock volatility, we view the inclusion as a watershed moment for institutional investors to revisit what they know about Palantir. From a fundamentals perspective, we can explain the historical low institutional ownership by 1, the direct public offering, DPO, that implies less institutional ownership versus the IPO, the traditional initial public offering, and 2, the multi-class share structure, where Class F shares represent only around 0.05% of total, but have a voting power of 49.9999, not the German one, percent. That limited investment from certain institutional investors and inclusion in certain indices. Not being included in these indices restricts investment from mutual funds, ETFs, and other passive investment pools for money. So you've got Exhibit 1, Exhibit 2. Exhibit 1, S&P 500 members boast strong institutional ownership, percentage ratio of freely traded shares held by institutions to the number of float shares outstanding. Palantir sits at around 45.8%. Number 2 here, Palantir's percent of share held. Institutional ownership has expanded 6 points in the last year. Lastly here, how do they reach the $50, right? So we are updating to $50 from $30 to factor in a higher valuation that fairly accounts for Palantir's strong profitable growth, leading position on AI implementation, wide competitive moat, and strong mission-oriented culture. We are rolling our valuation 1 year forward to reflect 2026 estimates. Our updated valuation implies a $116 billion EV, enterprise value. This valuation would upgrade Palantir ranking to slightly under 100th place in the S&P 500 index. So, the $50 is based on a one-time EV to sales to growth multiple to 2026 versus the prior of 0.7 times on 2025. This multiple is slightly above the gap profitable software infrastructure and industrial automation group, ranging from 0.5 to 1.8 times. The average is 0.9 times based on current price objectives. We think a stronger than peer group multiple fairly captures the beneficial position to national security and US government allies modernization efforts, a leading role in AI-powered platforms, opportunistic partnerships, strong balance sheet, and strengthening profitability. So, there you have it. Do you agree? Do you disagree? Let me know down in the comment section below. Now, before ending this video, I just want to show you one extra thing, also one thing that Emir has showed me, which opened my eyes a little bit. So this is basically Palantir's government revenue and commercial, the orange and the purple, and the blue line is free cash flow. Free cash flow is growing quite nicely year over year. Now, this is from Emir, And look at what happens. Of course, he has a full discussion on his own channel, his own articles. You should definitely check it out. Look at what happens if free cash flow stays flat up until 2029. If we look at this scenario, then the value per share sits at $29.87, which only represents 13.6% downside from the price we're at today. Me personally, I would have thought it would have made a big difference if in the next coming years, right, in the next, 5 years or so, 4 or 5 years or so, free cash flow doesn't move an inch. I would thought the difference would be much bigger. But no, actually it's pretty simple to explain. It's because the majority of this value of Palantir is terminal. Basically, Palantir right now is just not young, because we know it's not a young company, but the growth story for Palantir is still early days. And that's why you're seeing this exact scenario here. Free cash flow not growing at all for a couple of years, but because all the big moves, all the value is terminal, you're not really seeing such a drastic change to the value per share. Opened my eyes a little bit, to be honest. So to conclude, like I said at the start of this video, Palantir's momentum seems to be unstoppable at the moment. That does not mean that you have to FOMO into Palantir. If you miss the train, I do think that you're going to get some opportunities down the line, because no stock goes up and up and up and never comes down a little bit. What will bring Palantir down a little bit? I don't know. Company specific news, probably macro. But hey, I don't invest in macro, I invest in specific companies, so I don't really care much. Anyways, that's all I've got for you right now. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.